Well, thanks for joining us today. I'm Marlin Bohling with you, your tour guide to the ag commodities. And yes, the markets are open. Yes, the grains did open higher, but they were coming off of their earlier highs. Let's review where we are right now. Let's go to the corn board. And these quotes provided by bar chart are showing we are still higher, but we have given up the universal double-digit gains that we had early on. September is now 7 3/4 higher. We're at 5.72 per bushel. So we've come off of our earlier high from last night by about 9 cents. December is now a dime higher at 5.74 1/4 per bushel. Let's switch over to soybeans, and on the soybean trade, we'll begin with that August contract. It's up 16 at 14.50 1/2. September up 14 3/4. And we have the November new crop now 14 3/4 higher. Check that, now 13 1/2 higher. Now we're at 13.29 1/4 here so far this morning. Now let's move on to Chicago wheat, and we have September still 16 higher at 7.75. However, I'll put an asterisk by that because it's only a penny from our low of the day. Look at where we had the high last night, 7.93 1/2, and now we're all the way down to 7.75 here this morning. So it has given up a lot of ground from overnight highs. Now Kansas City wheat, September up 16 at 8.36 1/4. And that's only 2 ticks from its low of the early morning trade here so far. How about spring wheat in Minneapolis? We're 10 1/4 higher at 8.81 1/4. We are joined by the illustrious Chris Swift of Swift Trading. He is based in Nashville. He tends to join us live on the studio set, and we love having him come on board here. So thank you for coming in.
Absolutely. Good morning.
Interesting morning here on a Monday. A little bit of a firmer tone, although everything seems to be just kind of fading away as you came in. Why?
I think we got a lot of indecisions now, but the corn crop being pretty much made, you might get some areas where the moisture will help, but in the areas where it's been absent so far, I doubt any of that moisture is really going to help. So you got a lot of selling pressure that happened over the last couple of weeks and saw a big decline in a very short period of time. I think you might see people just kind of have some reservations about what they want to do going forward here.
You know, you were talking about that when we talked in the hallway coming on through the break there, but you were saying that in some cases farmers have said the heck with it, they just slammed the bin door shut.
Oh, yeah.
And they're willing to be more patient.
I think so. And of course, after a $1.50 drop, it kind of makes sense to be able to do that. And we still have so many unknowns about this year's crop. We believe that the yield won't quite meet the expectations of what the USDA has. And we feel there's a couple more percentage acres that are taken out of the harvest that will either go into silage or abandon, one of the two.
So I did want to point out, there was a news item that came out over the weekend, and I'll ask you about that. It was out of an agency in Argentina where they were lowering their expectation for wheat acreage in Argentina this year, just because of the drought and possibly also because of the economy right now. But they're a pretty big competitor of the U.S. when it comes to wheat production. Could that throw a monkey wrench in there?
Oh, absolutely. And wheat's probably the most volatile of all the markets with the European issues that are going on. And we allow one ship to go, and then we blow up the ports, and then we allow money to change hands. And now we ourselves coming into the fall wheat seedings, really deficit of moisture ourselves. And wheat's still real high up here at $7, $8 a bushel.
Well, you know, we're only about a little over a month away from starting to plant winter wheat in the southern plains, and there is no moisture.
Zero.
I mean, in a lot of fields. I mean, I remember in Texas here earlier this year, you remember they said that some of that wheat seed was still laying there from last fall. Hadn't come up yet. Things haven't changed that much.
That'll be a big deal with cattle, too, coming up. So.
Well, and to that end, I want to bring that up here when we come back in a moment. We're talking with Chris Swift right now. We're going to take a break right here, and we'll talk about that situation with cattle production. Had all kinds of numbers Friday, and we'll see what it means when we come back. Thanks again for joining us. We have Chris Swift in studio with us, and we're going to talk now about our livestock trade. We'll go to the live cattle board and take a look at our quotes provided by bar chart. As we go to the futures here, we are mixed. We have August a dime higher now at 137.47, almost exactly $1 off of our earlier low this morning. We're about 17 cents, or 13 cents rather, from our high of the day. October now 7 cents higher at 143.07. So just kind of floating along here on the live cattle board, not doing too much of anything at the moment. On the feeder cattle market, we're a little bit softer. August is 60 lower at 180.95. But you know, that's $1.45 off of our earlier low this morning that was set close to the open. And we had a high that was roughly about 20 cents or so above where we are now. September feeders, well, they're 40 lower at 184.07. Interesting where you have the January. If you're reviewing at home, January is down $1.20 on that far out deferred month. It's at 187.55. So it's given up quite a bit of ground way out there. We'll talk about that. Lean hog trade, well, the nearby August going downhill by $1.70 today at 117 even. October down 90 cents at 95.42. The far out deferreds for next year are actually 30 to 40 higher. Let's go back to Chris Swift. You and I were talking during the break. The cold storage report seems to stand out to you out of all the data we got last Friday. Why?
I think just because of the year-over-year increase. I think it elevates how much our cow kill has been, and I think a lot of that meat has just gone into the freezers because most of that will be ground meat. And then the on-feed report came out really as anticipated, 11.3 million head on feed, and that's not burdensome, but it's still a little bit higher than what you might like to see. And from that, the inventory report only being about 1.5% to 2% lower on that, most everyone had assumed that that's what that was going to be, because we do know that we'd had a large cow kill and a larger heifer placement over the last 12 months.
So let's go back to that cold storage screen that we have, that graphic available there. All the categories on the red meat side, the red meat up 24% from a year ago, beef up 29%, pork up 22% from a year ago. But I'm thinking back a year ago, is that when we had the run on the retail supplies in the supermarkets, or was that longer ago already? It's kind of a blur.
I think it's a little bit of both, but I think most of all of our issues are pretty much over with by 21. So although it may be some of that and replenishing some of those supplies, if you look at all of them being up, I think it's a testament how much we've increased packing capacity.
Okay, and then we noted on the futures trade where that January contract all by itself is moving much more. Let me bring that up here. Was that on feeders or live cattle?
That's feeder cattle, the January feeder cattle.
Let's bring up that feeder cattle screen here. Yeah, there it is. The January contract down $1.20. So what's that about?
I think it's probably the premium that it carries. It looks carrying about a $6 premium to the August contract. And the news that we received over the last week was not necessarily bullish. It wasn't bearish by any means, but it wasn't necessarily bullish. So maybe you're just trimming some of those premiums off the futures.
Ah, okay. Well, thanks for helping us try to make some sense out of all that data that came out. And it was a bunch.
Yeah, it was. It was a lot.
You don't always see all of them come out at the same time. But appreciate the help. Mr. Chris Swift with us from Swift Trading. He's based in Nashville. So, Janet, with that, I will turn it back your direction.